Hey everybody, how's it going? How's it going this morning? Guess what? No more jury duty. Dun, dun, dun. Got through it all. Uh, Only had a disruption 2 days out of the 10. So glad to be back with you and back to regular scheduled programming. So welcome everybody. Valerie, Wade, Larry, Merle, Muku, Donald, Sergio, Chris, Rex, Craig, Terrence, Francois, Gary, Rob, Maurizio, Indy, Eric, Carlene, Joseph, Swinburne, Diane, John, Bob, Marianne, Alan, Jan, Dan, Alan, Rick, Goose is in the house. General Rush, good morning, sir. Roland, if you want to chat with me like all the fine folks, click the button over here, be a subscriber on the channel. And a few seconds later, the live stream chat opens up while I'm live. If I'm no longer live, well, you're going to have to leave a comment down below. Take my sweatshirt off here. It is kind of cool and rainy, and I might freeze, but got these nice warm lights and stuff up here. So, War Dog, good morning. Don't recognize your name, but welcome to the show. Welcome to the show. And well, I love how Windows like rearranges everything on me when I flip on the live stream. It's just so handy, handy dandy. And I need to pull up this thing right here and grab a couple charts because, well, it closed it for me. Here we go. Oh, well, that's not what I wanted to do. And open a new tab, please. And open a new tab, please. And open in a new tab, please. All right. Here we go. Here we go right here. Look. So this contract right here, JPMCC 2021, it's a mortgage-backed security right here, a mortgage-backed security trust. If you have a Bloomberg terminal, you can grab one of these. You can dig into this kind of information. Now, there is 1440 Broadway in New York City. That's the 1440 right there. It's contained, the loan for that commercial real estate is contained in here. And guess what? They just missed a payment. They just decided not to pay the April payment at all. And so now this thing is underperforming. And this is just one of many. And that's a $400 million loan tied up in this mortgage-backed security right here that missed a payment. This can have ripple effects. Now, we're just talking 400 million. And here's the type of, right here. I know I didn't share it. Right here. This is the thing right here. This is the thing. This is the JPMCC 2021 1440 JP Morgan Commercial Real Estate Sector Trust here. And guess what? They had, it didn't really matter. You're not going to, this is off a Bloomberg terminal, and it doesn't, these numbers are just crazy numbers. And that mortgage maturity, 2036, and they're missing payments in 2024. This can be a problem. And it's going to compound, all right? Now, we have office loan delinquencies have bumped up to 7%. Last time we saw 7% delinquencies, back here in 2017. We got above it in 2012. That was on the back of the, this is where problems were. All right, we had problems 2007, 8. Things started unraveling. Hotels had a problem faster than office space. We saw retail. We saw multifamily really ramping up in there. And that was that subprime lending. So right now we're seeing CRE already taking off. This could be an issue. These are one of the things to watch. Now, this is not going to burn the market down tomorrow, okay? This is This is like duration risk, if you will. This is something that Goose and I, Goose loves to hit me about. Like, what's the thing coming down the pipe that might burn us all down? So this right here, I've been talking about it for what, a year, more than a year, right now. It's a problem brewing, and we're on the wrong end of the trend at this point. We're still climbing. It's actually gaining airspeed here. We're getting more defaults on commercial real estate. Now, interesting, during COVID, hotel delinquencies shot up, and we saw retail delinquencies shot up, and they're still at elevated levels. Office space, like what I got, what I rent here, office space delinquencies, and this is not renters, this is owners of the real estate. Right, this is the people that rent to people. Right, they're the owners of the building. Delinquencies are up. This is a problem. And now, here's the deal. We have 28% more. A lot of these were kicked down the can. That we had all these programs in 2020 that kicked a lot of this stuff down the road. Now, here we are in 2024, first half 2024. We have a little over $500 billion worth of CRE that needs to be dealt with. And these are the CRE part of this is in here. Commercial mortgage back. These are mortgage-backed securities right here, and what they're tied up into. All right, so we have 500 million right there, and then the second half. These are ones that have to be refinanced, dealt with. All right, and who owns them? So the second half of the year, we're getting close to $1 trillion. Over $900 billion of these things have to be refinanced or dealt with. So we got the first half, kind of a problem. Then we got the second half that's a much bigger problem. And you notice that's the biggest bar on this whole chart right here. So next year we have a smaller set of maturities. If we kick this can down the road at all, it all piles up into 2025. Now the problem here, a lot of people have been putting it off, trying to push it into the second half, expecting those rate cuts from the Fed. Right? This is where it all starts to coalesce among the bigger ongoing narrative I've been talking about. They've been expecting those rate cuts, believing the narrative and pushing these out. If we can get 6 rate cuts in 2024, we push it out to the end of the year. We can take advantage of that when we refinance the mortgage. But guess what? Now, instead of being 6, we're down to, you notice this little baby down here. A lot of these got kicked out, pushed down, get some extensions. There's not 6 rate cuts coming. There's probably not 3 rate cuts coming. In fact, there may be a rate rise coming. If all these are punting down the road because they don't have the money to refinance at the current rates, and we go up in rates, this is like, we're looking at $1.4 trillion right here in commercial real estate. You don't think that's going to be a problem? We'll see what happens. 7% delinquency on that. That's still a bunch of billions of dollars. And if that delinquency rate keeps climbing, look at the whole entire panel here. And that's really, the 7% is across it all, but 7% applies to short term and long term. So we're talking about a lot of money tied up in commercial real estate. Counting on lower rates, but the rates are going up still. This can create a problem. It's one of those threats sitting out there. It's kind of a known unknown, right? Those been in the upper end of the military planning, you know about your known unknowns, right? Like this is you don't know what's going to happen with this, but you know that it's sitting out here, right? It's unknown what the reaction or problem, like how it's actually going to unfold, but we know that it's a problem. So it's sitting out here, and when it all comes to a head, this needs to be dealt with this year or early next year, because we're going to compound it next year. So, and It's not really a government bailout situation either, I don't think. The government didn't really bail out commercial real estate before. They bailed out banks, but not commercial real estate. So it could be. And I saw a note this morning how Jamie Dimon selling a lot of his JP Morgan, like 182 million or something like that. Let's see if we can find the insider. Do they have insiders? No, they don't. Don't have insiders on here. It's interesting. Anyway, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. Just because I've been talking about it doesn't mean it's going to happen, and just because I predicted it doesn't mean it'll come true. Even though I got a habit of getting lucky. This presentation intended to be informational, educational, fun, and entertaining. It is not a recommendation to be buying or selling any financial instrument. No stocks, no options, no bonds, no forex, no futures, no cryptos, no treasuries. Don't long them, don't short them, don't trade them. Don't buy them, don't sell them. And if you desire personal financial advice, that's not what I do. Please consult a financial advisor. All right. Now the calendar for the rest of this week, kind of still on the benign side. Got to jump back to this week, and we had unemployment claims coming in today, coming in a little spicy. And I mean, look at that. That was a nice little pop compared to are we getting to the point where they can't hide it? I don't know. That may have been the low of the cycle and we go on another cycle here. But like I've said, we just tend to oscillate in this zone between 200 and 300,000. That's, historically back before COVID. That was exactly what we did, just tended to trend up and down right in these zones, all right? And there was 2008, big bump up to 600,000 weekly claims, and then we're back down to, so when we're not in the problem territory, 200,000 to 300,000 people losing their job every week is pretty standard. I mean, think about it. There's 300 million people. 200 whatever million of them actually working, and there's probably 200,000 idiots that get fired every week. All right, I mean, as the economy gets bigger, this number actually should trend higher because there's that many idiots out there. Them keeping this artificially low is kind of weird, in my opinion. But anyway, that number probably means jack squat because it's all estimated and seasonally adjusted and blah, 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 blah. So the rest of the week, we have a 30-year bond auction that could cause some chaos at 1 o'clock. And, if it starts moving at 1 o'clock, you're like, what the heck has just happened? 30-year bond. And the algos love that stuff. Because it's some preliminary consumer sentiment tomorrow, which I don't expect huge move, but we could get a little volatility out of it. But that's it for the rest of the week. And next week, we have the CPI and PPI coming in. We have PPI before CPI, oddly enough. PPI coming in on Tuesday. CPI, core retail sales, coming in on Wednesday of next week. Then we've got unemployment claims, of course, like always, on Thursday. And we get this treasury report on Friday, which that's actually an interesting report to me. But we'll see what's in there, and I'll probably tell you about it the following week after that. And then coming up on down, look at this. We're already getting into the later half of the month here. Craziness. Looking on down, FOMC meeting notes, which a lot of people will say that's the FOMC meeting, but it's not. It's just notes, meeting minutes. We'll get those coming up on the 22nd. And then some flash services, flash manufacturing. There's just not a ton of stuff coming in. The rest, it's kind of weird. It's a weird, benign kind of couple weeks here. And then we get down into the end of the month, into holiday. Banks are closed. Memorial Day there. And just crazy how we're going to wrap up the month. PCE coming in that last week, right on the 31st. And then we'll start into June. So crazy. Where does the time go? Getting down near halfway done with the year. So what's moving today? Pop over here. Still hovering. This has got me very, very, very concerned here. Look at this resistance to breaking them up. Now we could hover and break, but we could hover and drop too, because that's right at resistance. We came up from below, hitting right there. A lot of times we see this, so be very careful. Now, what is developed though is the ability to pop this on up into this 5250 area, specifically on ES, and on S&P, the ability to push this on up just a little higher. Could even make a nominal higher high. Oh, I thought this 5200 might hold. We could see this pop a higher high. Could come up just a little bit above. This is a pattern we commonly see where we get this corrective three-wave move up, which it's hard not to argue that this move right there and this move right here so far equal and a three-wave type situation. We could see that extend. Talked about this several days this week, how we get these three-wave moves in a correction. That extension up here, 52.25, possibly even 52.84, nominal higher high. So we could see this spike on up, potentially into this zone, and then still roll over all the way back to the roadmap line. This is where it's muddied up the waters. All right, this is, I hate to be like that, but very cautious on this at the moment, because the price action in here, the smaller, all the way down to the smaller time frames, doesn't look very constructive for continued bullishness. All right, very, very, very cautious. NASDAQ showing a little bit of, this is why I keep up with these. All right, here's the S&P 500 companies, broad swath of the economy. We tend to be up more than we're down on average. And if we go look at a yearly candle chart here, 12 months, and zoom her out a little bit, you can see, like, how many reds do we have in the last? We've got a green, green, red, green, 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 red, green, green, red, green, 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 red, green. You can see, most of the time we're green. We do get the occasional red year, right? And maybe like, well, that's ES, not S&P. Well, they're basically the same. All right. Now, NASDAQ, on the other hand, this is our biggest, best, brightest companies, right? Top 100. Green, green, red, green, 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 little baby red, green, 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 green. So much more green. These are the top 100 companies. All right. And when we look at the actual NDX, you can see like lots of green. All right. Now, compare that with Russell. This is our small caps. Getting more red showing up in there. More red. And if we go jump over here, we haven't made the higher high. Like, we're not even close to that higher high. That we would have to be all the way up here to be making higher highs on Russell. But we're down here, made that high at 2160, and we made this high recently at roughly 2070, 2080, maybe 85, and rolling down. This is set up to go down further, faster, harder. We didn't even touch the top of the range here. Very cautious. If we get any kind of acceleration, any kind of little hiccup in the markets, we could see a big, fast flush. All right, this is the kind of stuff I'm very, very cautious of setting up. What's the straw that breaks the camel's back? I don't know. Which day is going to be the day it all flushes? I don't know. All I can do is warn you that this is setting up in the price action. Very clearly setting up in the price action. Has me very concerned here. And all I can do is warn you to be careful out there, all right? Hopefully you wouldn't be here listening to me if you were just interested in rosy, everything's great stories, and then when this all burns down 2 years from now, they're like, oh well, we called it and we saw it all coming, we told you about it, and it's like, no, you didn't. This guy's sitting here telling you about it. There's a few other news sources telling you about it. There's these problems brewing in CRE, in banking, in money supply, in interest rates, and it's showing up in the charts. All right. Starting to show up in the charts. Be careful out there. Diesel demand. I don't have a chart for this. I was trying to find it on TradingView last night. I don't think they have it. Yeah, I couldn't. Let's see. Yeah, I was looking. I was searching all over the place for diesel demand, and all I could find was it quoted, not with real numbers, but I couldn't. They were quoting an article or a trading desk or an evaluation. It's probably off a Bloomberg terminal. But diesel demand numbers came in at their lowest level since the lows of COVID. Now that's not CL. That's HO1 exclamation point. That's diesel demand, and we just hit the lowest level since COVID. But the prices are not down there. So this is an interesting development too. Like we're talking about demand is down here on diesel, but prices are up here. So this is it's an interesting. I mean, all these little pieces of this puzzle. So if we break further down on this one, could be indicative that we're going to experience some bigger downside here. This is already kind of set up a little bit bearish on heating oil. CL though, this will be interesting. Heating oil is diesel basically. This will be interesting if we actually go higher on CL, which we so far bouncing off of that level pretty strongly, back up to test the roadmap line. If we break higher on CL but lower on diesel, we could do this in the short term where we go rocketing higher on CL and help destroy demand for diesel, and then it all kind of house of cards comes apart. I'm just throwing that out there. Everybody thinks they're correlated. Correlations are correlations as long as they're correlated. Once they're not correlated, well, they don't hold. Gold here just keeps messing around right in the spot, not showing resistance to breaking out, showing resistance to breaking down. An object at rest tends to stay at rest until something upsets it. So at this point, just kind of expect it to hover around here for a little while until we can get some sort of move that pulls us off of that point right there. Silver, though, may be that thing. Breaking above. This is exactly what I had drawn on gold that I wanted to see happen here. Silver potentially about to take off. Now this is, compare this to gold. I wanted to see this break above these highs and this high over here in this zone that sits right on top of that. I wanted to see this get going. Silver, on the other hand, typed the wrong I. This one already potentially getting at her. That high, that low. We do have this resistance. We have a little bit more we got to get through right here. A little bit more. That can potentially launch us off to a much bigger target. Where does that target come from? It comes from this high back here. Whoop, clicked the wrong one. To that low. Gotta grab that high right there. That high right there, that low right there. This like long wind up consolidation start. 35, 43, and if we get ridiculous, 62, 75. So right now, just looking for 35. Now, how long? It could take us till next year. We're still working on actually breaking out here. Initial break higher, retrace before we can actually pump above that prior high there at 30. We can do that. Sets the stage to go much higher. 31, 32, 35 would be a confluence zone. And gold likely to ride along. Bitcoin, on the other hand, continuing to show weakness. What a bummer, but can't say it's unexpected. At this point, if we're going to exhibit any kind of bullishness, we need to hold this zone right here at 60,000-ish. Otherwise, if we get below that, odds are we're heading down here. Back to the 50s, 51. So that the breakdown below this could indicate we're going on down. We do have support at that prior low at 57, but odds are, if now that we've done that, if we break back below it, we're coming down here. Ethereum looks much less bullish. Time is ticking down to the spot ETFs on the 23rd. We'll see if that actually kicks off or not kicks off. I don't know. If they classify this as a security instead of a commodity, we're likely to see a large, fast flush in Ethereum, which may be a buying opportunity, because there probably will be spot ETFs. Even if this gets classified as a security, it'll just be a different kind of, I mean, think about it. SPY is a ETF of securities. QQQ, ETF of securities. So ETFs of securities do exist. It just won't be quite the same. Like, they'll have to revise their language and whatnot in those prospectuses to be able to get approved. DXY, just hovering. That potentially was the 3-wave correction we needed before we launch on higher. If we launch on higher, does that push the market lower? You tell me. Correlations and causations. We did dip all the way to the 1618 on the correction there. First move down, second move down. But we did overlap. We overlapped. Now, what do I mean when I say we overlapped? This low right here and the current price action is overlappy. Like, that's not what you see when we're getting continuation lower, right? Price action where this low and this high, they don't tend to overlap if we're going to get impulsive trending price action lower. So that move up yesterday kind of mucked this up, and tips the odds were this is all just a correction, and we're going to do some farting around here a little bit before we launch on higher. Probably 108 to 109 is the target on the upside for this move. That's the upside resistance. Now, could we stop right here and do whatever? We can do whatever, right? It doesn't have to follow any patterns. Just typically, this is not the type of price action we get before we get a big flush in the dollar or in anything. All right. So what's actually moving today? What's popping? What's dropping? EQIX. You don't usually see this kind of move in a real estate investment trust, especially with pretty crap earnings, but missing on the top, missing on the bottom. And when I say missing on the top number, bottom number, missing on the top, missing on the bottom. And somebody asked me how you get these on the chart. It's pretty simple. Come on to chart settings, come down to events, and turn on things like earnings, dividend splits, latest news if you want that, news notifications if you want that, and things like that. All right. So those are events. Earnings, not great, but yeah, that's a heck of a move. I mean, look at that. $80, 11%. That's just wild. Pretty wild. I'm sure they announced something rather. Dividend yield indicated 2.4%. And there you go. It's not a high yield real estate investment trust, but I mean, hey, big moving. Wow, look at that. It's pretty wild. Just even when you adjust it for the dividend, it's a ridiculous move. HubSpot, not really interested in trading on that one. I like to chase the higher yield stuff like 8, 9, 10%. And if I'm going to tie up my money in something like a real estate investment trust or MLP or one of those type things, I like to go for the higher yield. And I do have something called double dip trades that goes after the move in the stock plus the dividend, the high yield dividend, and kind of juices it up. So it's currently not for sale, I guess. It's not been a popular product, but I do run that thing, and if you're a Termar Trading Lab, you have access to it. HubSpot, we'd need to move back above that, and it was popping pre-market. Now it's dropping, and, well, not able to hold the move up into the open. Sezzle, was it this one of the buy now, pay later things, right? Or something like that? Sezzle? I don't know. Seems like you see that logo on pages where you're buying stuff. If we can break above that, possibility to go up to 124. The roadmap line is non-existent, it looks like. Not enough candles to have a roadmap line, I guess. So, not great. It looks like a 4-hour bounce, I guess. Possibly 124, 167 app. And back to the daily. Popping through. Next zone up. That's encouraging. Getting through these prior highs. Through this consolidation. It's popping the 83 area. 89 next above that. And then another consolidation zone. Right there. Another resistance where we bounced off the bottom. Blurred it up real good. Unfortunately, we just have to climb these resistance zones until we can get some free, clear air. But that's what I talk about when I say IPOs are not bullish. Look at this. A little initial hype, but then flush. Lower low. $8, $9. It could be 10x if you bought it. We're swift enough to buy in there. And look, earnings didn't turn for about 6 months. The stock price turned about 6 months ahead of earnings being better. Tends to be what we see. The stock prices will turn down about 6 months before earnings start being bad again too. It's kind of funny. Kind of funny that way. Site time in kind of a downtrend. It doesn't look like an attractive pattern to me at all. Coming off the lowest low, and lower highs. That can easily go lower. Camtech. 95, 102. Not a lot of opportunity on that one. Right now. Yeti. Excuse my stomach. Good grief. Stomach just goes. Rah. Yeti popping up under the roadmap line. That's not looking great, everybody. That looks like the kind of thing we see before we get continuation lower. You see this? 3 kind of big major moves here. Now you can break it down some other different way. That's 1, 2, and the third wave up, which came up much short of being an echo of the first move up. Retracing down, getting a low lower than all this stuff. That's not exactly the kind of proportions we see on bullish price action. This can easily extend down, possibly 23 down here. Be very careful on that one. Zia Lab. Looks like we're under the roadmap line. Coming off the lowest low. That can result in a drop also. VITL. Nice pop. Still below. That's, again, IPO bearish. Found the bottom. Let's move up. This retrace right there. The only thing that has me concerned was that 3-wave move there. And but that's hitting the kind of levels we need for continuation higher. Retrace here, take it on higher from here. And if we were to retrace back down, fill the gap, could set it up to head on up to this 65 area. Potentially, it would take a retrace back down like this to get that move like that. So watch for that one to pull back. And if it did, in fact, I'm gonna go ahead and set me a alert here. All right, NTES, that I was requiring a pullback to about 30. Basically a gap fill to be able to trade that right there. NTES. Nope. Nope, nope, nope. Stuck in between. Nope. AGS. Already moved. I mean, sometimes they show up and you're late to the party, and that could result in a pullback, but it's also low price. Low price stuff doesn't always follow these patterns. A gnarly chart. FUTU. Futu Holdings. Looks like that's on the way to 81. SN. Shark Ninja. Oh, is this the people that... This is the parent company that makes Ninja. Yeah. Okay. I was like, Shark Ninja. That must have been a merger acquisition. Yeah. All right. Yeah. Not too shabby there. Keeps on ramping. Don't really have a way to project anything to the upside. There wasn't much price action over here to work off of. At some point, it'll probably meet some resistance and get a nice retrace back to the roadmap line. The roadmap line is very short. This hasn't been around long enough to give me much information, so not a lot I can do on that one. QCOM. Got to beat that resistance. Otherwise, odds are we're coming right back down to the roadmap line. Now, if we can break out, could rally on up here to 230. WRBY. Man, nope. Just sideways chop. Nope, nope, nope. There's the resistance, and we're just right up into it. TTD. Potential for this one to go up to 95 to 99 area. 110 above that. GDXU. Well, here's your leveraged gold miners. If you believe that miners move with gold and you were so inclined to try to play it, this would be a way you could buy 3x leverage without doing options. Now, leverage is dangerous. And you may get cut and burned, and leverage cuts both ways. This doesn't exactly look like the most bullish pattern yet, but it could hold on to it, all right? What we've possibly got is this first move, second move, third move, fourth move that doesn't overlap the first move. This is one of those key points right there, like this high right here. This correction not overlapping that down there. That's bullish price action. Now, if we were to get a higher high here, anywhere higher than this point here, that is an indication that this is going to be bullish. But there's always caveats, right? We will probably need a retrace off of this first that will take us back down around here one more time. Before, and it could be as deep as here, back into consolidation. Usually on these retraces, we only, this would be high enough that we would only retrace back to that wave 4 consolidation area like that. So we may see a move up to there, but nothing's given until we do it. All right. That's just wild guessing right now because there's not enough price action shown, and it's leveraged, so it doesn't necessarily follow the pattern and proportions. EPAM decliners, ouch. Whew. Beat on the top, beat on the bottom, got murderized, lower low. That's what it looks like when we get, like, that was, why do I focus on these 3 wave moves? Look, one right there, the retrace, and up there, putting the fib lines on it, first point, second point, third point. We came up to that 1.272 point. Now reversing lower. Where would the downside target be? That low, that high, 174, possibly 148 on the downside for EPAM. Right there you go. Duolingo. Right back down to the roadmap line. Now this is what I was talking about on S&P. You see how we nominal higher high here? 3-wave fashion. Right back down. This one's probably set up for a move lower at this point. I hate to say it, but potentially going to get a move down to 154. That move, that correction, 160, 140. Depends on which way you do the fibs, but, this would be my expectation right now for Duolingo. Would I trade for that? Nah, not really. That's not high probability stuff. It's just trading corrections is very, very, very difficult. All right, I'm very cautious on those. It's one reason I'm very cautious on the market. I see the pattern, but it's not developing yet, and it can make you wait longer for it than you can stay solvent. That's a long existing market adage that the markets can stay irrational longer than you can stay solvent. If you've never heard that before, and Norfolk Southern potentially doing a bullish retrace. We want to see it hold this area right in here and turn higher again. And if it does, this could be a crazy move. We could be looking at something up in the 300 area on North NCS here. Get back above the roadmap line. If you want the roadmap line, links in the description down below. While you're at it, you might as well give me a like. If I've said anything that's helpful, beneficial, informative, give me a subscribe. If you want to chat, give me a ring the bell with the notifications. If you want to get notified when I go live every single morning. I mean, do the things. And ARGX just chopping around. Airbnb, right back to the roadmap line. Imagine that. Find support there, break back above this, and off to the races once again. I thought with the way this was acting that we may see that dip to the roadmap line. There you go. That's what we got. Roblox potentially turning a little more sour here. There's some new entries on XLE, XOM, J&J, C, and CAT. New entry, new entry, new entry, new entry, new entry, and CVE. Interesting. So Roblox doing that move. Those are all 30-minute time frame market roadmap bounces. Just so you know. XOP, there's another one. It must be 10 o'clock. Yep. ARM. Still working on dropping. Oh, there's some more. YH. Lots of oil. Lots of energy shooting off there. CRM. Potential roadmap bounce. Potential to do it. That high. This low right there. We're going to have to gap fill and 332, 350 with the upside targets. FWRD. Whew. That. When the dumpster fire gets going. That was actually the highest high. Look at that. Just burning it down. Could that go out of business? You betcha. Losing money. Look at that. Estimating to making money. Lost a crap ton of money. And burning it down. Trucking seems to be a story of haves and have-nots. I tell you what. Look at that. Contrast that with Ford that we just looked up there. You know, yellow goes out of business. XPO, look at this. I just got something delivered from XPO this week. XPO crushing it. But then Ford absolutely getting murderized here. Can't remember what JB Hunt is. Oh, there it is. JB. Yeah, JBHT. There it is. Still making money, but having a rough time here. Interesting. Then you compare it to something like XPO, and it's just ramping off higher and higher. Crazy. ACN. Watch out for that one. Looks like it may push lower. EXAS. That one also may push lower. Toyota Motors coming, probably gunning for the roadmap line at this point. Found that resistance. Probably going to flush back down. RXST. That's no clear continuation higher, but if we can get back to the roadmap line and kind of clear that up. CDLX. Just kind of chopping around, not really doing anything constructive and bullish at this point. If we get below this zone, we're probably like if we close down here today, probably gunning for $4, if not $2. SEDG continuing to flush on down. Next target down around 47. ALGM continuing to flush on down. And that low, that high. 22 and 20 on the downside. PANW was getting a nice pop, and we need the continuation higher through the resistance to get up to 413. I'm riding like 5 shares at this point, showing a slight profit yesterday and the day before, and just kind of no enthusiasm to do anything here. We do have earnings coming up here in about 10 days, week and a half. PL, Planet Fitness, PLNT. My youngest loves this place. Lower highs, lower lows. That's a downtrend. Kind of expect this to continue this way. And in stark contrast with Planet Fitness, pizza. Ouch. Holy guacamole. Higher food costs. Now, is this a measured bounce? Going to take us higher? Can we hold that 618 level? That could be a big long-term opportunity for a 255. But it also could be we break down and extend lower down to 18. That's a big range. A really, really big range. So we need to see this hold support and turn higher back above the roadmap line to indicate we're going up here versus breaking down below this support and heading down here. And in stark contrast, DPZ consolidating high, while PZZA is getting crushed, and Yum, Pizza the Hut is also looking kind of corrective here. Interesting. Anyway, all right. Yeah, strong moves up on low volume. Thanks for coming, everybody. And my bias for the day is extreme caution still. I can't say enough how dangerous this spot is right here. Even if we push higher on S&P, Russell has this setup where we're already arcing over. These things are coming together to indicate that we may see a flush out in the market that's bigger than what we had. Funny enough, wait 1 second before we go. I took a screenshot of something I just remembered. I gotta show you. Hold on. Let me throw this to myself in Discord. Everybody's gonna laugh. This is funny. Open browser. Pop this up. Look right here. Guess what? Right there. Be careful. This is like the biggest be careful right here. All right, that may be even more be careful than anything else I've said right there. All right. Have a great day, everybody. Be safe out there. Give me a like if anything I said was beneficial, even if you like this right here. And have a great day.